See, these are the basic terms we covered in the last sessions. What in by sales, what in by stock, what in by expenses, what in by expenditure, what in by loss, what in by profit, revenue, gain, discount, voucher. Okay, so all these things we covered in the last sessions. Okay, so you know now what in by sales. Sales means whatever the manufactured in the business, so or whatever they are providing the service to the customers, and after manufacturing the products they are selling to the customers or the other entity, means the other for the enterprise or the other business, is nothing but the sales. Okay, so next one is what stock. Stock means whatever the unsold products is there with the business is nothing but what stock. Okay, so which is remained with the business is nothing but what stock, means unsold goods. Okay, so expenses means what after expenses incurring immediately we are getting the economic benefits is nothing but what the expenses. And the expenditure means what, so after incurring the expenses we are getting the economic benefits after the 5 years, and these expenditures are made on to purchase the fixed assets. Okay, so the loss means what, the expenses is more than the income is nothing but the loss. And what am I profit means what, the income is more than the expenses is nothing but what the profit. And what am I revenue means what, so whatever the business is there, and whatever the activities is going on in that business, means the manufacturing activity or the production activity, and after selling the product manufactured products or the production products, whatever they are getting the income is nothing but the revenue. Okay, so the gain is not and the regular activity in the business. Okay, so gain means what, it is not just like the profit, but it's a one time yearly, two times or one times it's getting whatever the profit is nothing but the gain. And how it is getting, so after 5 years whatever they are going to sell the assets, fixed assets, and on that they are getting what profit is nothing but the gains. Okay, so discount means what, reduce the value of the price or the cost price is nothing but the discount. Okay, and the voucher is means what, it is the evidence for the transactions. Okay, so it is the evidence for the transactions. So there are three types of the vouchers, the memo as well as the invoice as well as the receipts. Okay, so memo when we get, so memo when we are going to do the cash transactions, at the end we are getting what's memo. And invoice when we are doing the which transactions, credit transactions, at that time we are getting the invoice bill. Okay, and when we are going to make the payment, at that time we are getting what's receipts. Okay, so these are the basic terms we covers, and I hope all of you understand this. Okay, so in this session we will see the important accounting concepts. So which are those concepts are there? Okay, so which are those basic accounting concepts are there, so we will see. So first one is a what, business entity concept. What, business entity concept. So now see what is a business entity concept. A business and its owner should be treated separately as far as their financial transactions are concerned. Okay, so it means what's the business entity concept. So you know what in my business means what, it is an artificial person created by law having separate entity with perpetual succession and with a common seal is nothing but what, business. Okay, so it is the business. And already you know what in by entity. Okay, so entity means what, which has the physical existence of the enterprises is nothing but what, the entity. Okay, so this business entity concept, what it indicates, so it indicates is what, the owner is separate from its business is nothing but what, business entity concept. Okay, what it indicates, so business is separate from its owner, or owner is separate from its business is nothing but what, the business entity concept. So it means what, suppose X is going to start a business. What, X is going to start a business. Okay, for a startup business capital is required, right? Capital is required. Okay, for a startup business rupees 50,000 is required. How many rupees? 50,000 is required. Okay, so X persons invested in a business is rupees 50,000. So now see, so this 50,000 in future the business want to repay to the X person. Okay, so it means what, business has responsibility, business has liability to pay or to return 50,000 to X persons. Okay, so it means what? Business is a separate and owner is a separate. Okay, so business and owner is separate from each other. Okay, so this is business entity concepts. Okay, so next one is what's money measurement concept. Money measurement concept means what? Only business transactions that can be expressed in terms of money are recorded in accounting, though records of other types of transactions may be kept separately. Okay, so it means what? So in this business there are so many transactions are taking place every day. Okay, every day there are so many transactions are taking place. Okay, crores transactions or the lakhs transactions are taking place in the business, right? Okay, and which is related only the money. Okay, which is related to the only money. So these transactions only recorded in the terms of money is nothing but the money measurement concepts. Okay, so suppose X is going to start a business. Okay, X is going to start a business and the capital is rupees 50,000, stock 2 tons stock or the 5 machines. Okay, 5 managers. Okay, so out of these informations only one information is correct to record in the account books, which is that capital is rupees 50,000. So these 2 tons stock we cannot record in the books of accounts because there is a no any money value. Okay, suppose the stock of rupees 1 lakh, then we can record. Okay, so as well as 5 managers or the 5 machines is this, we cannot record as a 5 machines, but we can record the each machine price is rupees 1 lakh and the total 5 machines cost is rupees 5 lakh. Okay, so in terms of money we have to record. Okay, so we have to record the quantitative. There is no need to record in the qualitative data in the books of the accounts. Okay, so they are avoiding the qualitative data but they are recording the quantitative data, which is terms in the figures. Okay, which in terms of the money. Okay, so these values are recorded in the books of the accounts. Okay, so this is nothing but the money measurement concepts. Okay, so I hope all of you understanding. Okay, so the next is what's going concern concepts. Okay, what going concern concepts? So now see, in accounting a business is expected to continue for a fairly long time and carry out its commitments and obligations. This assumes that the business will not be forced to stop functioning and liquidate its assets at fire sale prices. Okay, so this functioning and liquidates. So liquidate means what's wind up means what's close the business or the stop the business means what the liquidations. Okay, so wind up the business. Okay, so now see this going concern concept means what's going concern means what's business is going running is continuously year by year. So this is what's going concern concepts. Okay, so business will not staff until the management stopped. Okay, until the management board of directors stopped. So till that the business will not stop. Okay, so business is going continuously going year by year. So this is what's the going concern concepts. Okay, so next one is your accounting period concepts. Accounting period concepts what indicates entire life of the firm means what's the business is divided into time intervals for ascertaining the profits losses are known as accounting period. Okay, so this accounting periods concepts comes from the going concern concept. Okay, it comes from the going concern concepts. So now how it comes? Okay, so when you business start here, okay, so the business will go continue year by year. Okay, so we after it's going one year by year, so we cannot know that business is getting our profit or the loss. Okay, so that's why the accounting period concepts what it indicates. So this year by year, no, it's going on, no, full life is there, no. Okay, so this full life of the business they are bifurcated into the years. Okay, so 1 year, 2 year, it means the start from the 1st April and it will end from the 31st March. Okay, so their entire life of the business they are divided into intervals of the year to know the business positions, the business is getting profit or the loss. Okay, so this accounting period concepts. Okay, so the entire life of the business is divided into years or the weeks or the months. Okay, so this is the accounting period concepts to know the business position of the, okay, so yearly business is getting profit or the loss, that's why the entire life of the business is distributed into years. Okay, so this is the accounting period concepts. Okay, next, cost concepts. Okay, what cost concepts? So what it indicates, the fixed assets of a business are recorded on the basis of their original cost in the first year of accounting. Subsequently, these assets are recorded minus depreciation. No rise or fall in market price is taken into account. The concept applies only to fixed assets. Okay, so this cost concept is related to only the fixed assets, and what it indicates in the books of accounts, we have to maintain the cost of machinery, which is value we purchased the fixed assets. Okay, which value the fixed assets. Okay, we have to use the cost of assets. Okay, so there are two types of the cost: book value and the market value. What? Book value and the market value. And cost concept, what indicates, it's ignore the market value but it maintains the cost value. Okay, suppose in the year 2020 we purchased one machine of rupees 5 lakh. Okay, the just exact purchase price is rupees 5 lakh. Okay, so this 5 lakhs we have to maintain in the books of accounts. Okay, so in the year 2021, which value we have to use? Okay, so this machinery cost in the market. Okay, so in the year 2021 in the market, the cost of that machinery is rupees 6 lakh. What? In the 6 lakh in the market value. But in the year 2020 there was purchased the rupees 5 lakh. Okay, so in the year 2021 we have to record which value? Book value or the market value? We have to record which value? Book value. Okay, so whatever we purchased in the year 2020 rupees 5 lakh, so these as it is we have to maintain in the books of 2021 in the books of account as a 5 lakh only. But in the year 2021 it's the market value is rupees 6 lakh. Okay, so market value it is ignored and the book value we have to maintain in the books of accounts. Okay, so these are the concepts of the accounting, these are the important concepts are there. Okay, so whatever the remainder concepts are there, so we will see in the next class. Okay, so I hope all of you understanding. If you not understand, you can contact me. Okay, I will give the reply. Thank you.